everyone, and welcome to the Bitcoin Street Journal Market Update. I'm your host, Georgia. I'm sitting in today for Anna, who is on vacation.
See, and I'm Alfred. Glad to be back in the studio, Georgia.
Likewise, Alfred, today we're diving deep into the world of Bitcoin. We're going to unpack all the recent news, and there has been a lot lately, right?
Absolutely. From potential ETFs to wild price swings, it's been a roller coaster.
Exactly. So we'll break down what's been happening, what it all means, and importantly, what you should be watching out for. This is your go-to guide for navigating the Bitcoin landscape.
Whether you're a seasoned Bitcoin veteran or just starting to dip your toes in, we've got something for you. We'll try to filter through a lot of the noise and bring you some quality information.
So buckle up, grab your favorite beverage, and let's get started with the Bitcoin Street Journal Market Update.
All right, Georgia, so maybe we should start with the basics, yeah? What exactly asterisk is asterisk Bitcoin for anyone who's totally...
Good call, Alfred. So in the simplest terms, Bitcoin is a decentralized digital currency. Think of it as digital gold. That is also programmable money.
Digital gold. I like that. So no central bank controls it, right? That's the whole decentralized thing?
Precisely. No government, no single institution. It operates on a peer-to-peer network, meaning transactions happen directly between users. It's all thanks to something called blockchain technology, which, at its core, is just a public distributed ledger.
Okay, blockchain, we'll probably need a whole episode just to unpack that. But so, what's the point of Bitcoin? What problem does it solve?
Well, a few things. For one, it offers a way to send money across borders without hefty fees or needing to trust intermediaries. Think remittances, international business transactions. But beyond that, it is, an alternative to traditional financial systems that some people just don't trust.
Right, especially with inflation concerns and government control of currencies. Bitcoin gives people an option, a way to opt out, right?
Exactly. It's about financial sovereignty, putting individuals in control of their own assets. And because the supply is capped at 21 million coins, it's also seen as a hedge against inflation, unlike, say, the US dollar, where the government can just print more money.
Okay, makes sense. So, it's like a limited edition digital asset with a built-in scarcity. So, it's not controlled by one entity, which gives people a choice and may hedge against inflation.
Bingo. And, it also enables new kinds of financial applications that just weren't possible before. Things like decentralized finance or DeFi, but we can get into that another time. Speaking of new financial applications, Alfred, can we dive into the big news?
You mean the Bitcoin ETFs? Yeah, that's been the talk of the town.
It's huge, right? The SEC finally gave the green light after, years of rejection?
Years, Georgia, years! So, for our listeners who might not be following every twist and turn, what exactly does this ETF approval mean for Bitcoin adoption? I mean, is this really that big of a deal?
Huge. Think about it, Alfred. Before, investing in Bitcoin directly could be a hurdle for many people. You had to set up a crypto wallet, navigate exchanges. It could be intimidating.
True, it's not exactly grandma-friendly,
Exactly. But now, with a Bitcoin ETF, you can invest in Bitcoin through a traditional brokerage account, the same way you'd buy, Apple stock or a bond fund.
So it's like Bitcoin is now available in the kiddie pool. No need to jump into the deep end of crypto exchanges, huh?
Haha, exactly! It opens up Bitcoin to a whole new wave of investors. Institutional investors, pension funds, your average retail investor who's a bit crypto curious but doesn't want the hassle of managing their own keys.
Okay, I get it. Easier access, broader appeal. But does this mean a flood of new money into Bitcoin? Will we see the price skyrocket or...
Well, that's the million-dollar question, isn't it? I think we can see a significant increase over time, as institutions get more comfortable allocating a portion of their portfolios to Bitcoin.
Right. Because they have, a fiduciary duty to their clients. They can't just YOLO into Bitcoin, right?
Exactly. But even a small percentage allocation from these massive funds can have a huge impact on demand and therefore price. Also remember, it adds legitimacy.
What about the potential downsides? Are there any risks associated with these ETFs?
Sure, there are always risks. For one, these ETFs track the price of Bitcoin, but they're not actually Bitcoin. So you don't have the same level of control as holding Bitcoin directly. You're trusting the ETF provider to manage the Bitcoin on your behalf. Also, ETF fees.
Right. There's always a cut, right? You gotta watch out for the expense ratios.
Absolutely. And of course, the price of Bitcoin itself is still volatile. So even with an ETF, you're exposed to those price swings. But overall, I think the ETF approval is a major step forward for Bitcoin adoption. It makes it more accessible, more mainstream, and ultimately more legitimate in the eyes of the traditional financial world.
Agreed. It's like Bitcoin is finally getting its seat at the big kids' table. So it's one thing to get approval, it is another to retain it. It will be really interesting to see what comes of this. Okay, so we've talked about the ETF approval. But let's face it, Georgia, Bitcoin's been on a roller coaster lately. I mean, one day it's up, the next it's down. What's driving all this volatility?
Oh, absolutely. I mean, strap in, right? Price volatility is like Bitcoin's middle name.
Right?
There are a bunch of factors at play. I mean, the ETF approval, ironically, probably contributed to some of the initial volatility. You had that buy the rumor, sell the news effect, right?
Ah, yeah? I've seen that happen with stocks. So people were expecting the price to skyrocket immediately after the approval. And when it didn't, they took profits?
Exactly. A lot of traders and investors had been anticipating the ETF approval for months, even years. So they'd already built up their positions. When the news finally hit, they sold off, which created a dip in the price. I mean, also with the ETFs, you see increased trading volume, and volume typically leads to more volatility, especially with an asset like Bitcoin.
Makes sense. So it's not necessarily a bad thing, just a temporary market correction?
Well, it's a normal thing. I think corrections are healthy, they shake out the excess leverage and speculative froth. But, beyond the ETF news, there are other factors influencing the volatility.
Like what? Macroeconomic stuff?
Definitely. I mean, interest rates, inflation, geopolitical events, all of that impacts investor sentiment, and Bitcoin is definitely not immune. If there is fear in the market, people will run to safety. Sometimes Bitcoin is seen as that, sometimes it is not.
Right. Because Bitcoin is still seen as a risk-on asset, right? When there's uncertainty in the market, people tend to dump their riskier holdings, like crypto.
Yeah, I mean, to some extent. But I think that narrative is starting to shift slowly. As Bitcoin becomes more mainstream and as institutions allocate more capital to it, it could start to behave more like a store of value, like gold, and, offer a hedge against economic uncertainty.
Interesting. So less of a risk-on asset and more of a safe haven?
That's the hope, right? But we're not there yet. We're still in the early stages of that transition. And then you have to layer in the regulatory uncertainty, which is also a big contributor to the volatility.
Yeah. The SEC giveth and the SEC taketh away, right?
Haha, exactly. Any hint of stricter regulations can send shivers down the spine of the crypto market, but it works both ways. Any positive regulatory development can boost the price.
Right. So it's a constant tug-of-war between fear and greed, right? With news headlines driving the price up and down. I guess that's what makes it exciting, but also nerve-wracking.
Yeah, it's definitely not for the faint of heart, Alfred. But that's also what creates opportunities, right? For those who are willing to do their research, manage their risk, and stomach the volatility.
Agreed. You have to be prepared to hodl.
Speaking of opportunities, Alfred, let's talk about something that's historically been a pretty big deal for Bitcoin.
Oh, yeah. I think I know where you're going with this. You mean the halving?
The halving? Exactly. I mean, for our newer listeners, this might sound like some, cryptic Bitcoin jargon. So, Alfred, can you break down what a halving is and why it matters?
Absolutely. So, in a nutshell, the Bitcoin halving is a pre-programmed event that happens roughly every 4 years.
Right? I think it's every 210,000 blocks to be exact.
Yep. Georgia is spot on. I did not want to bore everyone with too much detail. The halving reduces the reward that miners receive for validating transactions on the blockchain.
Okay, so why does Bitcoin do that?
Well, it's all part of Bitcoin's design to control its supply and mimic, in some ways, precious metals like gold. By reducing the reward, the rate at which new Bitcoins are created is cut in half. It is like a digital monetary policy, almost.
Right, so it's a mechanism to combat inflation, right? Like ensuring that Bitcoin doesn't become oversaturated.
Exactly. It reinforces Bitcoin's scarcity. I mean, there will only ever be 21 million Bitcoin ever. The halving reinforces that.
Okay, so less supply, theoretically leading to higher prices, right? That makes sense.
That's the theory, yeah. I mean, historically, halvings have been followed by significant price increases, but past performance is not indicative of future results, of course.
Right, and it's important to remember that the market conditions are different each time a halving occurs, right? So there are no guarantees.
Precisely. I mean, you gotta consider the overall macroeconomic climate, regulatory landscape, adoption rate. All of that plays a role. But the halving is something that the Bitcoin community watches very, very closely. It's kind of a big deal.
Yeah, because it really reinforces that store of value narrative, right? It's like saying that, hey, this asset is designed to be scarce, so it could hold its value over time.
So, Georgia, where do you see all of this heading? I mean, looking ahead, say 5 years from now, what's your take on Bitcoin adoption and its impact on the financial system?
That's the million-dollar question, isn't it? Or should I say, the 21 million Bitcoin question? I think we're at a really interesting inflection point. You've got growing institutional interest, increasing regulatory clarity, albeit slowly, and a growing awareness among the general public. I think in 5 years, we'll see Bitcoin much more integrated into the traditional financial system.
Integrated how?
Well, I envision more companies holding Bitcoin on their balance sheets, more pension funds and endowments allocating a small percentage to crypto, and frankly, more everyday use cases for Bitcoin. Think using Bitcoin for payments, for cross-border transactions, that sort of thing.
It is already happening.
It is, but I think it'll be way more widespread. The real game changer will be when we see wider adoption of the Lightning Network. That will make smaller Bitcoin transactions way faster and cheaper.
Okay, so let's put a number on it. This is always fun. Where do you see the price of Bitcoin in 5 years? No pressure.
All right, let me put on my Nostradamus hat here. Okay, assuming the adoption trends continue, and there aren't any major regulatory crackdowns, I could see Bitcoin hitting maybe 250,000 to 300,000.
That is pretty bullish, Georgia.
I know, but hear me out. I think the limited supply, coupled with increased demand, is going to drive the price significantly higher.
Okay, I will play. I will say that if the ETFs do their job, and we see a lot of inflows from institutional investors, which is what everyone is expecting, I can see Bitcoin reaching, maybe $200,000. I'm slightly more conservative than you are, Georgia. I think adoption is going to take some time, and there will be bumps along the way.
What about the risks?
Well, regulation is always a big one. If governments start cracking down on Bitcoin, that could definitely put a damper on things. And of course, there's the ever-present risk of a major security flaw being discovered in the Bitcoin protocol.
Yeah, those are valid concerns. I think another risk is the environmental impact of Bitcoin mining. It needs to become more sustainable if it's going to achieve widespread adoption.
Absolutely. The good news is that there's a growing focus on using renewable energy for mining. And as the price of Bitcoin goes up, it incentivizes miners to find more efficient and sustainable ways to operate.
Agreed. And I think we'll see more innovations on that front in the coming years. Ultimately, I think Bitcoin has the potential to reshape the global financial system in some pretty profound ways. It will be interesting to watch it unfold, that's for sure.
Definitely. It's a wild ride, Georgia, and I don't think any of us know exactly where it's going to end up. But one thing is for sure, Bitcoin is not going away anytime soon.
Okay, Alfred, before we wrap up, let's tackle a question from one of our listeners. This one comes from @BitcoinBeginner on Twitter.
All right, let's hear it.
They ask, with all the talk about ETFs and institutional money, is there still a place for the small, individual investor in Bitcoin? What do you think, Alfred?
Absolutely. I think that's a fantastic question. And the answer is a resounding yes. Look, the beauty of Bitcoin is that it's decentralized. It's for everyone. You don't need to be a Wall Street whale to participate.
Exactly. The ETF approval makes it easier for institutions to get involved, sure, but it doesn't change the fundamental value proposition of Bitcoin for the average person. It's still a way to own a scarce digital asset, to opt out of the traditional financial system, if you want to.
Well said. And actually, the increased institutional interest could be a good thing for smaller investors.
Oh, how so?
Well, if the price of Bitcoin goes up because of institutional demand, that benefits everyone who holds Bitcoin, regardless of how much they own. Plus, it brings more legitimacy to the space, which could attract even more people to get involved.
I agree. It's all about education and understanding the risks and rewards. Don't put in more than you can afford to lose, but don't be afraid to get your feet wet.
Exactly. So thanks for the question @BitcoinBeginner. And for everyone else listening, we want to hear from you too. Hit us up on
Or X.
Hit us up on Nostr or by visiting the bitcoinstreetjournal.com and let us know what topics you want us to cover in future episodes. We love hearing from you.
All right, Alfred, that about wraps it up for today's Bitcoin Street Journal market update.
Yep, another deep dive into the world of Bitcoin. We covered a lot today, from what Bitcoin is, to the ETF approval, the price volatility, the halving, and what we think the future might hold.
It was a whirlwind, wasn't it? Hopefully, we've given you some food for thought, whether you're a seasoned Bitcoin veteran or just starting to explore the space.
And remember, this stuff is complex, so do your own research and never invest more than you can afford to lose.
Absolutely. Thanks for tuning in to the Bitcoin Street Journal Market Update. We really appreciate you spending your time with us.
Definitely. And hey, if you liked what you heard today, please subscribe to the podcast on your favorite platform, Apple Podcasts, Spotify, wherever you get your podcasts.
And don't forget to follow us on Nostr at bitcoinstreetjournal.com for more insights and market updates, or to suggest topics for our next episodes.
We love hearing from you guys. Until next time, happy hodling.
See you on the streets, the Bitcoin streets. See you on the next block.